Trading isn't easy. You learn that lesson pretty quickly. But guess what? Success is a lonely road. Success in anything worth having is tough. The only difference with trading is that we spend too long being sold the dream. We focus on the dream rather than trying to understand the reality. So let's remind ourselves. Trading isn't something you're going to become profitable with overnight. It takes hard work, dedication, and perseverance. Ignore the snake oil salesman telling you of get-rich-quick, holy grail press score and profit systems. They don't exist. It's a false dawn. Sorry to burst your bubble, but I told you, we're focusing on the reality now. So what makes a great trader? Someone who has grit and determination. Someone who focuses on the long term and isn't constantly searching for short-term wins. Someone who knows what they want in life and isn't afraid to work for it. Someone who can endure the long, lonely hours, working on their own, sometimes without any tangible gain. Someone who can go to bed and even if they toss and turn all night worrying about their previous day's performance, can still get out of bed the next day with a hop in their step and get back to work. You see too many traders give up too quickly when the reality hits them. We can all come out of the blocks at full speed with all the enthusiasm and conviction in the world, but there's a reason the stats show only a minority of traders end up successful. Because once things get tough, people give up. As soon as it becomes obvious that it's not smooth sailing, that you can't just cruise to the finish line, people make all sorts of excuses about why trading isn't for them. It's a scam. It's gambling. It's only for institutional traders. You need too much money. Once again, who said it was going to be easy? Training to become a success in any profession takes years of hard work. Trading is no different. It's just more accessible. We're talking about a market that exchanges trillions of dollars daily. And if you're willing to work harder than 90% of traders, you can carve out your piece of that. Just carving out your own small section can lead to the most fulfilling experience of your working life. That's what this is all about. Starting from something small, insignificant, and turning a number into something tangible. The ability to treat yourself and those closest to you to a better lifestyle. No more financial pressure, more security, more certainty. But besides that, the feeling of knowing exactly what you're doing in a challenging role. To wake up in the morning and know you've got your finger on the pulse of the entire world, the global economy that keeps everything ebbing and flowing, and you're an integral part of all of that. A knowledgeable trader, an investor, and an entrepreneur. You're part of an important group of professionals that keep the world turning. Sounds extreme? Well, guess what? It's the facts. So why should trading be so easy? The end justifies the means. We need to work hard for it. So if you had a losing day, pick yourself up and remind yourself why you're in this. If things have been tough for a while, go back to the drawing board and figure out what you've done right or wrong. If you've had a good spell, stay humble and focus on consistency. Make sure you keep your eyes on the long term and not the short-term wins. After all, this is a marathon, not a sprint. But most of all, beyond anything else, don't lose your enthusiasm and don't give up. Your story starts here. Stay dedicated. This is just the beginning.
Have you been thinking about getting into Forex trading? Forex trading opens up a world of opportunity for those who know how to do it properly. You can experience financial freedom and reap tremendous rewards for your trading skills. Unfortunately, many programs make big promises and throw students into the trading market without the proper knowledge and expertise to succeed. Fortunately, there is a solution. Great White FX Academy is the best place to start your Forex trading journey with the tools, resources, and education necessary to help you thrive in the market. Great White FX is an online Forex training platform that provides technical training that will help you succeed. It is of the utmost importance to have a proper qualitative education to participate in Forex trading, and that is exactly what Great White FX focuses on. You can reach us on Facebook at Great White FX and Forex Educational Academy, on Instagram at Great White FX, on Twitter
Hello, hello, good evening. Hello, good evening. If you can hear me clearly and you can see my screen, please can you type in yes into the chat box? If you can hear me clearly and see my screen, please can you type yes into the chat box? Okay. If you can hear me clearly and see my screen, please can you type yes into the chat box? Okay. So, thank you all for coming. You're welcome to today's Forex review with Grey White FX for the 16th of September 2019. So, without wasting much of your time, let's get down to business for today. So, the charts, they've already been marked up. You can access the, you might need to watch the videos again, but maybe at the end I would show the Instagram handle where you can get the charts. The charts have already been uploaded on the Instagram handle. So you could go there and get the charts. So I would post the link again later before the end of the program so that we can get it. So as always, we're going to start with the dollar index. But before that, we shall be starting with Forex Factory. The reason why we're starting with Forex Factory is so that we get an idea of the scheduled news announcements against our trading day. So tomorrow being the 16th, the Bank of Japan, they're having a bank holiday, which might mean slow yen movement. And there might be no major movement, just China. Then 2:30 a.m. on Tuesday, we're going to have this Australian monetary policy meeting minutes. It's a high impact news. So we need to pay attention to that and be well aware of that. Apart from that, we have FOMC on Wednesday, so you need to be pretty careful about that. And AUD unemployment rate. So you need to just be a little bit careful this week. We have monetary policy rate votes coming out next this week also, and official bank rate on the British pound. So you just need to be careful this week. Because if you notice, the GBP pairs gained a bit of strength. What probably might have happened was that those that have been selling started taking profit. And when they start taking profits, there's nobody to sell to. What happens? The market starts going the other direction. So knowing that this week is this rate news for the bank, as the Bank of England, official bank rate votes and monetary policy summary. So we need to be aware of that. That's coming in on Thursday. That's after FOMC on Wednesday. So we just need to be a little bit careful about our trading this week. So looking at the dollar index, the dollar index for now is a little bit bearish. It's a little bit bearish for now. So now, if it goes below this 97.86, then that means below this trend line will confirm the bearish move further down. But should this level hold, then we may see a little bit of rebound on the dollar index. And as you know, once a pair is in a downtrend, what you'll be looking for is you'll be looking for rallies to sell into. Because when a pair is in a downtrend, you sell strength. When it is in a uptrend, you buy weakness. So we need to be aware of that. So the next pair we'll be looking at is gold. And looking at gold from a from a 4-hour perspective, what you need to know is that most of these levels I've drawn are from the daily time frame. They are from the daily and weekly. So most of them, on when you see me looking at the 4-hour time frame, I've done what you call a top-down analysis. So I'm just using the 4-hour as my intraday time frame. So looking at gold, gold is sitting in a support zone for now. So two things, it may bounce up to test this broken trend line, but should it go below this support zone, you need to wait for it to retest and then a move lower. But should gold go below 1479, see 974, you wait for a retest and the move lower. But if you ask me, we might see a spike at this area. We might see a spike at this area because that is where this low comes in at. Because there might be positions and pending orders here. So you just need to be aware of that. You might see a trap here. So the next pair we're looking at is the USD CHF. And the USD CHF, this trend line is still holding. So my view, this pair is still bullish to an extent, but he needs to move above this zone, and that zone is between 99.47 to 99.75. Should price move above this zone, then we can say it's clearly bullish. That means it's very, very bullish. But if it stays below this zone, then there's a chance that it might either range or drop further down. So that's it for the USD CHF. The next pair we're looking at is the Euro USD. Looking at the Euro USD, the Euro USD seems to be in a kind of a channel, as you can see. So there's a possibility it may try to touch the top of this channel. And should the top of this channel hold, there is a greater possibility that we may see a downtrend on this pair. So we need to be well aware of that. Excuse me a minute. Hello? Okay. Sorry about the delay. I had to sort out something. So it's still slightly bullish because if we look at this pair from the daily perspective, let me load my weekly chart. Daily. Let me load my daily chart here so that I get an idea of what I'm saying. Okay. Euro USD daily chart. Do you see what I'm saying? This is Euro USD on the daily. You can see this long upper wick. This long upper wick does not portend bullish strength. It shows a rejection. So on the Euro USD, if you get a good daily close above 1.1076, then it's going to continue moving higher. So that's what we need to be aware of on the Euro USD. So if you ask me, there is a potential that price may drop a bit. But first, they may try to touch here, test this. Should this place hold? And then you get a good close below 1.1075, a good 4-hour close, then we may see it come down to test this 1 point level here. But for now, this pair, I can't see. I just can't see. It's not very, very clear. So we might see a little bit of sideways movement on it. And you know, on Wednesday is FOMC. So we need to be pretty much aware of that. The next pair we'll be looking at is Euro yen. If you look at Euro yen, no, Euro pound, sorry, Euro pound, we can see this trend line. There seems to be a sort of a channel. And if you look at this a little bit closely, you can see where price is. So there's this potential. This pair for now is bearish, but it has moved so fast. It has moved what I would say, it has moved so fast in so little a time. That's, it has run so fast. So it may need to catch its breath. Because if you look at it on the daily, you can see the weekly, you can see the big move, straight move down. So if you look at this on the daily, there exists a potential that price may try to come into this area. So that is what we have here. So price may try to come in here. Should price close above 89.05, then you may see a move higher. So the best thing is, if this area breaks, you wait for a retest and you move lower. But for now, this pair is in a downtrend. So you'll be looking for strength to sell into. Doesn't mean you can't buy. If your system tells you to buy with a good bearish evidence, you can open a long position, but you need to be well aware that you're against the prevailing trend. So the next pair we'll be looking at is GBP USD. Looking at the GBP USD, the GBP USD has really cleared out of this zone. If we look at it from the weekly point of view, the candle is very, very weak. But the GBP USD is at a zone. This is the zone. It needs to clear this zone. If it doesn't clear this zone, then we might see a bit of a pullback, and that might give those who missed this move opportunity to take long positions. So for this pair, it's still bullish. If it gives you bullish evidence, you might take it into this zone. But should it break above this zone, so what you'll be waiting for above this zone is something like break, retest, and they move higher. So the signal for the bullish evidence will be any of the bearish, any of the bullish candle pattern, any of the bullish candle pattern. So that is it for this pair. This pair is still bullish. These levels are potential levels of support, but the price now is at a weekly zone. Those of you that some of my students would understand what I mean by this pair is at the weekly zone. So it needs, this is a weekly zone. It needs to clear it, and it might give it a bit of a time. So you might see a bit of a pullback before the move higher. So the next pair I'm looking at is the GBP CHF. So looking at the GBP CHF also from a weekly point of view, it's clearly bullish. But also it's at the toppest area of his zone down. That's what we need to be aware of. So the GBP CHF is also at a zone. So there exists the potential you might see a bit of a pullback or a rally straight up. Then if it pulls back here, expect 1.2369 to possibly hold that support. But if they close back below 1.2369 and retest it, then you might see them go back down. But that does not change the prevailing trend, because as you can see on the weekly, it's clearly bullish. So what you might see is a bit of a pullback. So another system you can use for this kind of setup is, if you start to see the pullback, you take your fib from the low of the weekly candle to the high of the weekly candle. Once you do that, then you start watching for the fib levels of importance, which is the 28, 38.2, 50%, and 61.8. So that's how, if this high of last week is not taken out major, so that's how you play it. You look for important areas of entry. Then the next pair we'll be looking at is USD JPY. USD JPY is clearly bullish. It's just clearly bullish. Very, very bullish, as you can see. I said it, I've been saying it since last week. Its target is already in its target area, but it might pull back a bit before running up into the zone. So it might have a bit of a challenge between 108.57 to 109.51. Should it close above this area, that's within this week, what you'll be waiting for is a break, a pullback, and a move higher. That's what you should be waiting for. So in this situation, you'll be looking to buy into any weakness. If they drop and start moving back up, then you might look to take a long position with proper confirmation for this pair. For this pair, is still slightly to the upside, as you can see. It's a weekly time frame, still slightly to the upside, but he's at a zone. So you just need to be a little bit cautious with this pair. We know we have FOMC on Wednesday. One thing I've noticed is that whenever a pair has a major news scheduled ahead, it tends to sometimes foot drag. It doesn't move that fast. So the next one we'll be looking at is Euro Yen. Euro Yen moved up a bit. Euro Yen moved up a bit. As you can see from the weekly, I've already drawn that setup. You take the weekly candle from the low to the high and wait for a pullback. So two options here. Is either it pulls back to this zone or this trend line, or it runs up straight. But looking at it from the weekly, it has a bullish bias. So you just need to be careful. If you're trying to short it, you need to be careful. So the next pair we'll be looking at is a pound yen. We're looking at the pound yen. The pound yen also is very, very bullish. Very, 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 very bullish, as you can see. But it's at a zone for now. It's at a zone. This is a weekly zone. The zone is not clear on the weekly. It's very clear on the daily. As you see this area, you see the break, you see the retest, the drop. Now it's coming back to that area. That is what you have at this location. So if it is not able to clear here, you might see a bit of a pullback on this pair. So the next pair we'll be looking at is the AUD USD. So looking at the AUD USD, it's still ranging. Nothing so much on this pair. This pair is basically just still ranging. Nothing new on it. As you can see, wicks to the high. Nothing impressive, which means that it might topple. But you must be well aware that you have AUD monetary policy minutes by 2:38. So if you're taking this trade, you just need to watch out because it can just strike through this area. This is the area it needs to clear to continue to confirm its bullish strike. So two things, they might either trap here or break retest and move back further up. So that is it for the AUD USD. The next pair we're looking at is the Euro AUD. So looking at the Euro AUD from the weekly point of view, this trend line still seems to be holding. Trend line here. Then we'll go to the intraday chart. It might drop a bit, but this pair is still in a downtrend. As you can see, the highs are getting lower. It's making series of lower highs and lower lows. So you might see a bit of a pullback before it moves up. You can see on it, it's still struggling here, but you see, this is the situation here now. On the daily, it's at this point, above this trend line, then here it's showing you a downtrend. So it might drop a bit, probably to give a double bottom, then continue higher. So the next pair we'll be looking at is the GBP AUD. GBP AUD is GBP AUD. Clearly also bullish, but it's at a zone for now. It's at a zone for now. So, but I see something like a W formation. I'm not yet sure, but what will confirm it is price staying above 1.8080. If price is able to stay above 1.8080 to continue moving higher, that's here. If price is able to stay above this zone to continue moving higher, but if it goes back below this zone, it's going back down because as you can see, it seems to be in a range. There's no major trend here. It seems to be in a range. So just need to know where your range top is, your range bottom is, and you trade from those points accordingly. So looking at the GBP USD card, as I said it last week, it came to test this. This is not a pair I trade. It's not a pair I trade, but from my experience, I can use my analysis on almost any pair I wish to. I only trade few pairs, and the USD card is not one of them. But I said, if this zone holds, it's going to go back up, as you can see. And, well, the storyline now is there was an attack on the US Saudi refinery. So there is the potential that the oil price might spike up. Should oil prices spike up, this USD card may fall back down. So we need to be aware of that going into this week. If the market recovers from the shock, the move up may continue. So looking at the USD card, we might see a bit of a pullback as long as price stays above 1.3150 to continue moving up. But if it goes back below 1.3150, then it has some of these levels to contend. So that is it for today's currency review. And for those of you, the charts, the
888.
Chats are always uploaded on the Telegram page, on the Instagram page. I'm trying to get this to the Instagram.
88.
So these are my social media handles. You can follow me on any of them. You can either give me a call on this number or a WhatsApp chat. The chats are always uploaded on this Instagram handle. So you could go there, follow it. The Instagram handle in the bio, you could get across to all that I have to offer. From the Instagram bio, you could get across to the YouTube channel where the videos are posted. This review will be posted on YouTube channel. If you're not on any of the, if you're not in any of the Telegram groups, you could get the link to the Zoom meetings from the YouTube, from the Facebook channel. So these are the media's means of communicating with me, but most importantly, the Telegram, the Instagram is very vital because it has all my contact links there. So once again, I thank you all for attending today's class, and I wish you all a beautiful night's sleep and a blessed trading week ahead. Thank you all for coming.